So we're going to go back to the old school way of obviously teaching. We're going to do raw, uncut. Reason being, I've got a new standing desk and energetic, and I want to get as much information to you as possible. Today's video, I want to break down what's very, very important in relation to getting into trading. 2024, you're going to see all the animated videos of how amazing it is to be in trading, and no one's going to tell you the raw facts of what you need to look out for in 2024. And I believe that there's not a lot out there when it comes to this because people are obviously not being truthful in relation to trading. So I just want to break down some 5 simple steps. I'm not going to go into too much detail about the dark side of it. I want to tell you exactly what you need to be aware of when you're getting into trading and the steps that you need to take to even have half a chance of being successful in this industry. So this video has come about because last week we had a boot camp. And we had a couple of new people in the industry, or should I say in the community, on the boot camp, considering getting into trading part-time alongside their businesses, etc. on the side. And the next day after that, I got an email from one of the attendees. And the email says this in a nutshell. After looking over the boot camp and after going through the boot camp, I understand trading in a different way now, and I don't think it's for me, which was very, very interesting because they're just a hodler, especially in the crypto, but they thought that they could do a certain way when it came to risk management to make money. So I thought, why not make a video? Because maybe many other people think this way as well, that they can just throw some money in and trade and jump back out like they were if they were holding some crypto meme coin. So it's very, very important that I thought, let's do this video. So today I'm just going to speak about the steps that you need to understand from beginning to the end for you to even start the road, or on this road, should I say, to obviously trading. So the first one is platforms. Most people don't even understand what platforms that they're going to use, okay? Now in Forex, we know that you've got your brokerage, blah, 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 blah. However, in crypto, people just see high leverage platforms. Bybit, Binance, BitGet, Mexi, KuCoin, whatever that could name, ZoomX, whatever it may be. And a lot of people don't understand how to use them. And I know that because that's a problem I had. I was trading Bitcoin against Bitcoin when I first started many moons ago, not understanding why I kept losing Bitcoin but winning a trade. Yeah, it was quite complicated. So you need to understand the platforms that you're going to be using, because this is key, because you could press the wrong button and blow your account. So I recommend BINGX, but in the UK, it's not that good at the moment because of the new regulations. There's a few others, but because of regulations, your platforms may change quite a bit. So whether it's BINGX, whether it's ZoomX, there's a few others that you can try as well. Bybit, not in the UK or in the US anymore, unfortunately, to do your trading. And I believe Binance is obviously going through a few issues as well. So find a platform that you use, make sure it's credible, make sure that you know how to use the platform, whether it's Prime, XBT, etc., and get used to understanding how that works. So number 2, once we get that platform and we start to understand what we're doing, how are we going to make money? It's not as simple as like the casino, you want to put money in, even though some people do trade like that, but quickly it's not sustainable and it comes around and obviously makes their bank balance dip very, very low, if not to zero. So we need to figure out a way how we're going to trade. And that comes down to technical analysis. We need an understanding of how charts work. We need an understanding of how tools work on these platforms. Now, technical analysis is going to be the one that really starts your road of getting into trading, whether it's basics, Fibonacci's, whether it's support and resistance, Elliott waves, ICT, SMC, whatever it may be, you're going to find something that resonates maybe with your personality, your lifestyle, etc., of how you like to trade. I like to simplify it. It took me a while, but I got everything together. I simplified it down to Fibonacci support and resistance levels. If you want to know more about that, links in below. Discord has just reopened for the VIP, and the new course, updated course, and the 12-week program will be on a new platform. So look out for that. And we like to simplify it and make it mechanical so you can obviously take trades and be fine. You can set and forget on the higher term timeframes, or you can use the lower term timeframes with me, live trading 3 days a week where we break down the trades, etc., and in the Discord. So technical analysis is going to be where you start to take your driving lessons as if you was a 17-year-old again. So step 3, once we know those two, we're going to need some risk management, because what we do when we first trade is we win 5 and then we lose 1. and we're in the red. And we can't understand why that is happening. And that's all purely down to risk management and our trades not being set up in the right way. We need to know where to put stop losses. We need to know where to take our profits for us to be sustainably profitable over a long period of time. Now, the case that I was telling you what made me make this video was that person was looking to maybe risk $1,000 to gain $200. But then when I broke it down that you could win 5 trades and get that $200 and you would have made $1,000, your stop loss is $1,000, which means you've won 5 trades, lost 1, and you'll break even, where it should be the opposite way round. If you should be able to win more than you lose and still be profitable. So risk management is key factor. Once you find out your strategy, make sure you've conquered and nailed down your risk management, because without risk management, it doesn't matter if you have the best strategy in the world, you're going to lose. Some top traders risk their win ratio. They only win 30% of their trades, yet they're multi-millionaire. So that tells you all you need to know about risk management. So once you're doing that, once you've got this information from 1, 2, 3, you're going to need a trading plan. And a trading plan is simple. What steps do I need to take in the environment for me to take that trade? That's the key element there for me to take that trade, because so many people have this journal and they have the trading plan, but they don't stick to the plan. And if you're not going to stick to the plan, the trade is not going to work. We've all been there. It's part of a learning experience for you to get where you need to get to when it comes to trading. So make sure you devise a trading plan that suits, again, your personality, your lifestyle, how you are as a person, for you to be successful. If you're a person that's very busy, father, husband, and you need to do certain things in the day, you may not be able to trade all day on the 15-minute term time frame. I find that hard to trade all day on the 15-minute term time frame. Also, if you've got a business, if you don't do this full time, you're going to have to look at the 4-hour and maybe enter on the 1 hour. So make sure you have a trading plan and you ignore the noise around you from everybody else who's maybe scalping on the 1 minute, because they might get 1,000x and you're sat there and you're thinking, why can I not do this? Because it does not suit your trading plan. So once we've got a trading plan, we need to know, does it work? And is it going to work long term? And that's where back testing comes in, people. Now, back testing, I've got to admit, I don't like back testing. I don't really do that often now, but I have to if I go on a losing streak, because back testing is the only way we're going to get data from before for it to give us an indication that this works. We can't front test because we want to be in the game. We can't front test to figure out if something's going to work because it's not here yet. But back testing, we're going to have to make sure that we do that on our strategy. And if you was to mark 100 trades and it worked 65%, you've got yourself a winning strategy. It's that simple. But only if you take those trades. And most people don't. We've all been there. We try and get in. We think it's going to go one way. We don't understand. We got FOMO. We've got all that stuff. And that's for another video. Psychology is the reason and the key for you to make your money in this game. But this is just for the people who want to get into the game and understand that these are the basics that you need to understand. Back testing is absolutely key, as is the other sections that we've already spoken about. Now, the next one is kind of strange. It's a warning. And the reason it's a warning is because not many people give you this warning. They want to make it fluffy and nice in their videos, etc., and things like that. And the reality is you're going to fail, okay? And without going too deep on the psychology side, our brains are made to fail, and the environment of trading is designed for us to fail because our brain cannot comprehend what trading involves. That's a biology lesson for you later on. If you've already seen some of my videos, you've probably come across one of those videos before. However, you must understand that you're going to lose. You're going to lose. You could have beginner's luck and maybe flip a few accounts that you see on Instagram and YouTube. It's not sustainable. It's just not sustainable if you want to have this long career. If people make flip accounts and make money, I bet in 6 months they've ran out and blown those accounts. You want to see this as a career, which means you're going to have to put a lot of time and a lot of effort into this. And that involves capital. Now, the best way to go about losing your money is in education, because it may be coming out of your pocket straight away, but you're seeing something for it later on. So whether that's books, whether that's mentors, whether that's courses, be cautious on what type of courses you take, and be cautious. You want finer details and a mechanism, a system that's going to suit you as a person, but you must invest in yourself. And that's a better way to, at the beginning, it seems like you're going to lose money because you may be 5 grand, 10 grand even in the red, but you're getting high quality information for that. The problem is, what I had and most people is, you might go and waste 5 grand on trying to trade on your own, and then you've lost that money. And that is what most people are going to do. Even the people that watch this video, the most people are going to go and do that because they think they know better and they don't want to go through the learning curve. And that's why the success rate is so low. So be prepared. You're going to lose money, but the better way to probably lose that money at the beginning, in fact, is spend it on education rather than losing the money to the market, because you're not getting anything back. You're getting some feedback back, but you don't know, because your brain does not know what's going on. So again, be prepared to lose money. It's a big warning. And then finally, capital. How can you generate enough capital for you to trade? Now, you've always seen many traders maybe look for 3% a month. And you're thinking, well, 3% a month, that's a bit silly. But imagine 3% a month off $500,000. Imagine 3% a month off $1 million. And that's where prop firms have now come in and gave the average person a very good opportunity to generate capital very quickly. Now, there is phases. You have to pay fees for these phases to get past. There's plenty in crypto, there's plenty in Forex. But as you know, I predominantly trade Bitcoin and indices, which means I need a platform for both. And that's where, for me, Crypto Fund Trader came in. Absolutely excellent platform. User face is unbelievable, so much better than, say, a Meta MT4 or MT5. It's not quite as crisp as, say, a TradingView, but you can still do your charting on TradingView and execute your trades on Crypto Fund Trader. Yes, the price is a little bit different by the dollars, but that's across the board on exchanges. So Crypto Fund Trader, they do 1 or 2 phase. There is no time limit. You can use their own interface, and you can have up to 200,000 multiple accounts on that platform. There is a link below with many people in the industry, in our community, have already used that. A couple of people have already passed that challenge. So well done to you. And we're working with our mentorees to make sure that they get that challenge passed this year. So those are my steps when it comes to talking about how you can get into trading. Again, raw, uncut, best way to possibly do this. I have to get a little bit of bloopers out as always, but this is how I'm going to do these videos, just because I'm standing and I'm hyped at the new standing desk. So as always, God bless. Hope you got some value from this video. If you did, please share. If you're thinking of getting into trading, ignore the noise, educate yourself, hit the like and subscribe, and I'll see you soon.